Okay, good afternoon, everybody. My name is Charles Sells. I am the Director of Acquisitions, Director of Acquisitions for Platinum Investment Properties West. This is my third try at this webinar, so excuse me if I trip over my tongue a little bit here. Having some technical difficulties, and obviously we want to get this right because we're talking about some really important items here. Tonight what we're discussing is foreclosure and your options otherwise for your 2010 Illinois tax lien investments. If you're listening to this, you are an investor from the 2010 tax sales in the state of Illinois. You've got some liens that have not redeemed as of yet, and there's a lot of options that we have to consider. There's a lot of process that you need to understand as we move forward. For those of you that have actually gone through this process in the past, I beg that you listen to this webinar. I will try to get through it as quickly as possible because there have been a considerable number of changes that we have made on behalf of our investors to try and open some more opportunities, some options with regards to what they can do at this stage of their investment process. With the economy, all signs say that it's bouncing back a little bit right now, but from investments in 2010 and the pace of redemptions, we're still seeing it's improved a little bit, but we're still seeing more liens than the average remaining unredeemed, where clients, need to make a decision as to what they're going to do next. So just a summary of events, or a summary of what we're going to discuss here. First and foremost, foreclosure costs in Illinois vary from lien to lien. This is very important, very, very, very important for our clients to understand, because we, in the past, have had clients assume that the cost to foreclose is set in stone. And it's absolutely not. Every lien is going to be different from lien to lien. What we do know is set in stone is the ATAF fees. That stands for Attorney Title Agent Fees. Those two can actually, let me back up a little bit. Those two can be fluctuate a little bit. If there's a continuation, if the homeowner contests our foreclosure process, those kind of things can increase the cost a little bit. As a generalization of the average, the cost to foreclose could be between 3 to 7 times the original cost of the lien. As we go through this a little bit more, I'm going to show you where we come up with that figure and how we get to that figure. As far as your ATAF fees, your attorney title agent fees, those are the ones that we pretty much know are going to be fairly consistent. It's everything after that we know that there can be a change in what could potentially be owed in the process. That seems like a really high number, but if we're suggesting foreclosure, we're expecting your returns following the issuance of a tax deed or title to the property to far exceed your investment at this stage. At the end, in the state of Illinois, unlike other states, your tax deed is actually a warranty deed. And for those of you that don't know real estate lingo, a warranty deed is what you get when you purchased your home. Do you have a lien on it with the mortgage? Absolutely. But what the bank or the mortgage company has is a warranty deed to that property. Warranty is exactly as it's defined. It's insurable title to the property. There's not going to be anybody on there that can come back and make a claim or anything otherwise. So at the end of the day, that's what you're getting in the state of Illinois. Finally, and also equally as important as the varying costs in Illinois, it can take up to 18 months to finalize the process. In 2009, things moved really fast. I can't put my finger on as to why, but we actually have been foreclosing a lot faster than average. In Illinois this year, we're at about 10, 11 months to finalize the process. Those are getting pushed out a little bit right now, but on average, with the exception of 2009, it can take up to 18 months for us to have that clean, insurable title to the property. So it's very important that our investors and our clients understand every phase of this process as we move forward. So understanding the costs and risks and reward with foreclosure in the state of Illinois. Legislation in Illinois changes more frequently than any state I have ever worked in or have experienced working in. Fortunately, it has not really changed since 2009. Our investors that have watched this webinar for 2009 know that the laws have not really changed, so we won't get into what it was before. If redeemed throughout the foreclosure process, that basically if in Illinois, certain states, and when a lien matures and we have the right to foreclose, we do what's called, like in Georgia, for example, we do what's called foreclosing the right to redeem. In Illinois, all we're doing is trying to take tax title to the property, so it can actually be redeemed throughout the entire process of the foreclosure, all the way up to the day that we go to court and tell the judge, hey, we've done everything, give us the title of the property. It can be redeemed all the way to that point. So in Illinois, per the changes in legislation a couple of years ago, what you get back is all your interest and penalties. In Illinois, we actually call them penalties, plus your principal, what you paid for the lien, plus postable fees. That's the big difference between, let's say, 2008 and now. And I'll define the difference between postable and non-postable fees as we go through this a little bit. Are paid to the client, the tax buyer. So again, you're getting all your interest and penalties, what you paid for the lien, which is your principal, on top of that, plus the postable fees to foreclose on the property. Everything in Illinois is considered postable with the exception of ATAF fees. And again, that is attorney, title, agent fees. Because of these changes between postable and non-postable fees, what we established a couple years ago were progress payments. Instead of an investor or a client engaging in foreclosure and authorizing foreclosure, and we would just take the funds to do so, and we'd hand it over to the attorney, and then we'd invoice as necessary for expenses outside the scope of what we initially invoiced. Because the foreclosures can be redeemed throughout the process, and because there are postable and non-postable fees now, we take progress payments. That mitigates the potential for loss in Illinois. So again, if you initiate foreclosure, you're going to have postable fees, which will be paid back to you upon redemption of the lien, and we will look exactly what that looks like throughout this broadcast. And to mitigate that potential loss on the ATAF fees, which is the non-postable fee, we take progress payments on behalf of the investors. Odds of foreclosure, once initiated, once you authorize us to foreclose on the property, are about 50%. That's a fairly conservative estimate. However, just like when you came to us as a prospect to invest in Illinois, and we explained to you that the few things that we cannot predict is the liquidity of the liens and when they will get redeemed. Just the same rules apply for foreclosure. We cannot predict if that lien will redeem or if you'll actually take title to that property. And obviously, that is the crystal ball. That's the one thing that we cannot answer for you. So if we step through the process of foreclosure, there's a lot that is happening behind the scenes. There's a lot involved in the state of Illinois compared to other states. A lot of our clients have hands-on experience investing in other states themselves. A lot of them understand the laws and the rules that are involved in other states. Illinois has got to be the most complex process of them all. But, it's kind of you get what you pay for scenario. You get great returns on redeemed liens, but then you have the headaches at this stage of the process on anything that isn't redeemed. So how do we mitigate that a little bit as well? First is we audit, we notify owners, and we reassess everything that is unredeemed within your account. In November, when we're at the peak of our tax sale season in Illinois, we are doing audits of all the unredeemed liens that are coming up for maturation, which is the end of the redemption period, if I happen to use that term again. We audit everything because, we're working with, county level government, and obviously, as we've all been to the DMV or certain other state levels of government, we know what the experiences can be. So we have to go through and we have to do audits and make sure that we have caught every single redemption before we even move to the next phase of the process. Once we've done that, in December, we do an aggressive campaign, which is, we call it an owner notification campaign, and that is exactly what it sounds like. Every which way we can, we will notify the homeowner that we are getting ready to foreclose on their property, and do they want that to happen? Do they want to deal with those extra costs and those extra headaches, or do they want to go ahead and pay now? In January, we do the reassessment of everything, and honestly, we've gotten a head start this year. It should really be January to, let's say, March 31st. Beginning of April, we are doing a reassessment of everything. One, our owner notification program is winding down, so we're processing more redemptions from that. And before we go to the reassessment process, we want to make sure that we have cleaned the slate as much as possible. The cost for us to do so, which is outside the scope of your management fees or anything else that you pay to PIP, is $125 per lien. This is a new fee this year, and the reason we have added this fee this year is because there is a lot involved with everything we do. There's a lot of extras that, one, the new legislation allows us to do. So we have actually established new programs, new policies and processes that cost us a lot of money. And the idea behind it is to save you a lot of money. And as we go through this process, you'll see that the $125 per lien is insignificant when compared to, I'll use the term, the intimidation factor of having the number of liens that you may have to make a decision on and what you want to foreclose on. So it gives us peace of mind. It also gives you peace of mind that we have done absolutely everything possible, to get the liens redeemed, because Illinois is not a state that we encourage foreclosure like we do other states. Most of our investors know we define our investors in two ways, and that is the return on redemption investor and the investor that wants to foreclose on property. If you're investing in Illinois, you're not the investor that wants to foreclose on property. So we're doing everything in our power to limit what you need to foreclose on and what you're going to take title to, and the big question at the end of the day of well, I didn't want to own property in Illinois, what do we do now? That's what the $125 per lien is there for, is to exhaust all our other options before we engage you or ask you to make that next decision. So if we go to February, March, and even push that out by a few months, PIP will make recommendations to you as the client to foreclose and engage in the next phase of the process. And again, I don't want to turn everybody off foreclosure, but as investors, you did invest in Illinois initially to foreclose. But it's always out there. It's always something that we have to consider. Could be a potential down the road. So that's what we're doing. It says February, March. We're actually pushing that out to probably the 10th of May. Is honestly when you'll your absolute drop-dead deadline may be on that process. Okay, so the next step. We're only through the first step of this process. The next step is to engage foreclosure, file the petitions for tax deed. And again, this will start this month, and it will go through the 10th of April. That will be the absolute drop-dead deadline for anything. For some of them, on an individual basis, we'll tell you this is it. You have to initiate by this date. And it's all based on when we actually purchase the liens to begin with. So, at this stage of this process, you have already received a letter by mail or by email from me or our office that is more or less the printed version of this webinar without so many details. In that, you have the authorization to foreclose on the liens. The next phase will be that you submit that authorization to foreclose. We want you to fax that to us, and we want you to mail it to us. The sooner we get started, the better. The initial progress payment for that is going to be $1,050 for each lien that you initiate foreclosure on. And again, you may not want to initiate foreclosure on any, or maybe just a few. And then if you don't want to initiate, we'll talk about the other options that you have. But this is engaging us to start the process. So what does this $1,050 include? I'll discuss that a little bit more as we move along through this presentation. Once that's done, we will submit the original certificates and all the related legal document to the attorneys for filing of the petition. I call it foreclosure because everyone understands foreclosure. The technical term is petition for tax deed. That is actually what we file it with within the county. That's our lingo within the office. That's what we're doing. For the group of investors, we call it foreclosure. It's one and the same. So if I say one but not the other, consider them the same. Once we file the petitions, the circuit clerk, circuit court clerk, will then issue a tax deed case number, just like any other case number for any other situation that requires a judge to be involved in any state, county, federal level judicial system within the country. They will file a case number for us. Once the case number is given to us, we file what's called a Form 2210. Now, all of you know, because you were all invoiced for it originally within 3 to 6 months of your initial purchase, that we invoiced you for a take notice. That form was actually called a 22-5. Now, the secondary take notice, as we refer to it, is called a 22-10. And that is basically a take notice stating that we are going to foreclose on the property. We have filed a petition for tax deed on the property, and it is sent to the homeowner, anyone who has an interest in the property, any lien holders, so forth and so on. So step 3, and this is a biggie for our investors. So now we have actually filed the take notice, or we have filed the petition. We have filed the take notice, the 2210. The next stage of the process, even though we have filed that take notice, is called prove up. We have to prove extensively that you have the right to foreclose and take title to that property because you were not paid back on your lien. It is a massive undertaking in the state of Illinois, and a lot happens during this process. Once the petition for tax deed has been filed and the 2210 has been filed, we then take it to the next step, which is ordering the title searches to know who is on that chain of title, which could include mechanics liens, second mortgages, first mortgages, all of that stuff. We have to inform all these people of our intent to take title to the property. This is where phase 2 of the progress payment comes into play. which is going to be another $1,050. And again, I will go through what that $1,050 is applied towards. And again, as I said in the first slide, this is only a generalization. Your specific fees may be more or less, depending on the lien or the property's individual circumstances. So again, don't assume that this is going to be set in stone. Your fees could be different than this, but this is what our averages have been. Notification in the prove-up process can be certified mailings. It is sheriff's services. All of you, most of you, hopefully, have not had to experience a sheriff's service, but if you can imagine being served by somebody who's wearing a badge, that's essentially what the sheriff's service is. We have to do a sheriff's service. We also have to do newspaper and legal publications. We have to do all kinds of things to make sure that when we go to court, we can tell the judge, hey, look, we have done everything to get this homeowner to pay off their taxes and redeem this parcel or this lien. We can't get them to do it. We deserve rights to the property on behalf of our investors. Newspaper and legal publications. If you want to know what those look like, pick up any paper on a Wednesday afternoon. They'll be in there. It could be the registration of a INC corporation. It could be a standard foreclosure through mortgage process. It could be a lot of different things. But we are bound by the same terms. We have to publish within certain newspapers, and every single paper charges a different fee. Why is that important? Because it goes back to the $1,050 per each lien authorized. Your fee for publication could be $100 in one county and $600 in another county. And we'll get into that a little more as we move forward. Most importantly for me, this process takes months. Not can take months, it takes months. Just in the newspaper publication alone, it's going to be 3 months from the time we publish. Investors need to understand that no news is good news. If you don't hear from us, you haven't gotten any correspondence, invoices, or calls from us, that things are moving forward the way they're supposed to, and we are going through this very complex process in the background on your behalf. So, number 4 of this process, judicial hearings and title possession, August through March of the following year. This more or less does apply. However, again, 2009 was fast, so I'm using 2009 as my baseline for when I say March. This could push out as far as November or December. That's where our 18 months comes into play. So understand that don't set your Outlook calendar to March and call me and say, where's my deed? We will try to update everybody as things change or as things progress, but it could be pushed out even further. We had probably 25 continuations today, and for the record, today is February 6th, about 7:30 at night, 2013. So even though we went to court today thinking we were coming home with tax titles, we did not. It's been pushed out to April. So again, we will update you, but no news is good news. To the point, once the prove-up requirements are complete, motion for tax deed is made with the clerk of courts. This is where we actually file all the evidence and say, give us the deed. Cases are heard within 39 to 90 days of us filing that motion, barring any contention. Obviously, any court action can be contested by, we'll call them the defendant in this action. So barring any of that, it could be 30 to 90 days before we actually go to court. If there's contention or anything else, it could be, obviously, those dates could be pushed out further, just like the example I gave you from today. The biggie here, if taxes or any fees in addition to what you paid for the ATAF fees, the non-postable foreclosure fees, and the postable publication fees and prove-up fees. These are done at this time. You'll be notified in advance of what these fees will consist of. It could be 3 to 4 years of back taxes plus all the penalties. How do we get there? Well, you bought 2010. It's 2013 now. You bought in 2010, but what you bought were 2009 taxes. So you've got 2010, 2011, 2012, 2013 taxes that you may have to pay, that may be assessed against the property, plus the penalties if they were sold through a tax sale. And if they're just past due, you're still going to have penalties. But because you're getting clear, insurable, warranty title to the property, unlike other states, this has to be paid in order to get that title. In other states, we can just foreclose the right to redeem or demand tax deed to the property without paying anything but recording fees. But it's a tax deed, and if anyone's watched our presentations or anything like that, there's a process called quiet the title. That's when you pay all these things. So with a tax deed, you can sell it, you can do whatever you want with it, but it may still have all these liens and encumbrances on the backside. Illinois, it's not. You have to clear all of that. We are quieting the title when we initiate foreclosure. We are doing all of this ahead of time, and that is the way the laws work in Illinois. It's not a policy of ours. That's how the process works. Once we go to court and the judge has signed off on it, then we actually pay the taxes or any other fees that may be owed. Within 30-45 days of that process, the county will actually, the recorder's office will actually send us the deed to the property. A lot is going on behind the scenes again as we reach that stage. Reassessments again, this time without any other cost. But because it takes a year to 18 months for this to happen, we do another assessment. We determine exactly if our exit strategy when you initiate the foreclosure remains the same at the time we take title to the property, because a lot can happen in that time. We may have said, hey, cash flow this property, it's owner occupied. When we take title to it, we'll just resell it. Well, that owner may have died or moved out or situations changed, whatever, at the time we actually have the title of the property, so our exit strategies may change. So, a breakdown of the costs. The reassessment fee, which is non-postable, that's $125 to initiate the process. Excuse me, my phone's chirping at me. That is assessed on every single unredeemed lien within your portfolio. It is a fee separate of any of the other fees we charge. The purpose of this fee is to actually mitigate your expenses. It gives us a much clearer picture of what we can do. What it basically does is it gives us a game plan where we determine, let's foreclose on this property. It's owner occupied. I talked to the owner. We actually did a drive-by, and this is their situation. We get all of that information. In the past, we did a drive-by. We did, a records search from the county records and said, yeah, it says it's owner occupied. This is what we should do. Now we've taken it to a whole new level. So when we go in, we have a much better sense of confidence on what we're recommending you foreclose on, or for that matter, what we recommend you don't foreclose on. Again, our interests are redeemed liens, and this fee could be insignificant versus having to force the redemption, which by forcing the redemption, we are forcing the foreclosure in order to collect your principal. That has its pluses and its minuses if you take into consideration the cost to force the redemption versus the cost versus the penalty that you'll get back should it redeem. Once the reassessment is done and once you engage us for foreclosure, at that stage there's another $500, which is for a title report. This basically just gives us, I'll call it, some reassurance that our initial reassessment is backed by, some chain of title paperwork that we'll get into and look at as well. It also includes the literally going by the property, knocking on the doors, and everything else that's involved with that process. And I will state, this year we have nearly 1,500 liens that we are considering for foreclosure or some other avenue. That represents a increase from our normal averages, but about where we were last year. Because we grew so much in 2010, the number is a lot bigger. But again, on average, our foreclosures of what's available to foreclose on this year are actually down a little bit from previous year. Again, the fees are going to vary from lien to lien. However, what we're charging to initiate the foreclosure or force the redemption is going to be $1,050 initially. $500 of that is the ATAF fee. And again, this is the one that's going to be consistent, barring no contentions or just a standard foreclosure. So you have $500 in ATAF fees, attorney title agent fees. That is a non-postable fee, which means that should it redeem, you don't get it back. And another $550 in postable fees, which means you get them back if they redeem. Should it redeem at that point, you're out $500. You profit everything else on the penalties and interest and whatnot, and you get back the $550 in the petition filing fees and the postable fees. Once we reach that threshold that I explained earlier, in phase 2.5 of this process, we invoice you another $1,050, and again, that's another $500 for attorney title agent fees. So now we're talking $1,000 to foreclose with regards to what your professional legal fees are. That's pretty darn low on the scale of things. If you go on your own and try to foreclose on properties in Illinois, I guarantee you're going to be spending at least $3,000 just in legal fees to initiate the process. Because we're doing so many, and because we have a long history with the folks we work for, it's a lot cheaper, obviously. Plus, we're doing them as a package. Yes, you're still treated individually, but we may go to county, ABC in Illinois with 20 versus you going to the same county with 2. So we're able to group the fees and get them down a lot more based on that. So again, we've got $500 in ATAF fees plus more postable fees, which is going to be, at this point, it's going to be those publication fees, the sheriff's service, those sort of fees. And this is really where the average cost to foreclose, you'll see the variation. We itemize every single cost that we have for you, but you'll see where your publication costs, again, in one county may be $600, and in another county they're only $100. With the changes in legislation a number of years ago, they loosened up publication ceilings and that sort of thing. So where we were spending $200 for publication fees, now they're charging us $600 for the exact same thing. So your total cost at the end of the day, on average, to foreclose on the property is going to be $2,325 plus any taxes or municipal city liens to foreclose on the that may be assessed to the property. And again, we've already talked about the taxes, the municipal liens. What are those? Those are going to be water and sewer, trash and recycling, those sort of things that will apply, that will carry with the property. Those will be owed. Honestly, the biggest one that we always run into is always going to be the taxes. The municipal liens that are always negotiable. And we do that on your behalf as well. We will negotiate the cost of them down if they're even there. So really the biggie is going to be the potential for more taxes. So I've been hitting on it a lot, but what are postable and non-postable fees? They're divided into two categories. Postable fees are going to be fully refundable should the lien be redeemed in the foreclosure process. This is going to be court fees, recording fees, publication fees, sheriff's fees. There are other fees that I have not even listed here that will also be postable. Again, we're going to itemize every single one of these fees for you. So you know going in, and we know coming out, should it redeem, what you should be getting back and what potentially you may not get back. So the non-postable fees. This is the biggest change in Illinois legislation a few years ago. These are the professional fees, and why they're non-postable anymore is because there was no regulation on them. There was no cap on how much you could charge. So people were charging $6,000 in abusing the system, basically, in attorney's fees, and the homeowner would have to come up with that because it was all postable. Everything was postable. So now they've capped us on what is postable, and they've capped it at $150. Nobody's going to find an attorney to even blow their nose for $150. Pardon me if any of you guys are attorneys. So the non-postable fees are going to be what we always refer to as ATAF fees, attorney title agent fees. These can vary between $1,200 and $2,200. How do we get such a spread? Contentions, continuances, those sort of things. We pay a flat fee to our attorneys to show up at court on X day for 15 hearings. If one gets continued and they have to come back for that one, they're going to charge us more for that one, and we're going to pass that fee on to the investor. There's no way we can get around this. So they're going to be between $1,200 and $2,200. If we're looking at $1,200 and $2,200, we're really only talking about 4 hours of reasonable attorney's fees at $250 an hour, and we use just a few attorneys to cover the entire state. We do have caps on them as well. They can't just bleed us to death and say, oh, I got to go down for this one for 8, and it's going to be 8 hours of driving plus 2 hours in court. No, we don't do that, but we do cap them. But yes, in some circumstances, the fees could be higher as far as what's non-postable. So here we look at what this process looks like. This is a redemption report. Most of you have seen a version of this report. And as you can see, you've got the date sold, which was a 2009 redemption, when it was redeemed, which is what is that? 3 years almost to the 3 years to the date. The amount it was sold for, the interest, which looking at the first one, I can see that the interest on this was the bid rate was 18%. So 36% annualized, comes to 108% after 3 years. Total fees, those are all postable fees. What you're not seeing there is the ATAF fees. So that is what the cost was outside the scope of the ATF fees to foreclose or attempt to foreclose on this property. So the total amount due to the investor was $4,002.34. And I'll just leave it on this screen for a little bit, because if you actually go through a few of these, you can see that the second one, we didn't even initiate foreclosure on it. The third one we did, and the postable fees were actually less than the first one, even though the lien cost was twice as much. So here we go with the the fact that just because you spend $2,000 on a tax lien doesn't mean your fees are going to be less or more compared to a $1,000 tax lien. So if you look at this, the total initial investment was $2,000. They made in interest $2,205, and the total payback, or the fees were $1,594. Total payback was $5841.96. We keep going down. You see that the postable fees increased on the next one. And then on the following one, there were no postable fees because it was not foreclosed on. So this gives you an idea of what could potentially be posted and what cannot. So again, everything with the exception of the professional fees is postable to the redemption amount. I've pretty much hit on this more than I need to, but I do like to try to drive it home a little bit. How much will you have to pay to foreclose? Those costs, again, they're going to vary considerably, as I just showed. We will do everything in progress payments throughout the entire process from November moving forward to mitigate your costs. Because at the end of the day, when you invest in Illinois, you invested in Illinois for the return on redemption. And we understand and we appreciate that. We do, however, as your agent, should you have anything left at this stage, need to give you all the options that are available to you so you can make the most sound decision based on your own personal exit strategy. And folks, everybody has a different exit strategy, regardless of whether they invested in Illinois for the same reason or not. When will you know if you have the property or not? Again, it can take up to 18 months, and I beg that you please be patient, because I can literally be swarmed for weeks just on returning phone calls, returning emails, whatever the case may be, and admittedly, sometimes it takes me longer to get back to folks than I would like to, and this can cause issues. A, with the relationship, but B, if there's time-sensitive deadlines, that sort of thing, it can cause issues with that as well. I want to give all my investors the same amount of time and devote the same amount of commitment to each of you. And sometimes that's hard if folks don't follow the rules, for lack of a better term. So please be patient. No news is good news. We will update you both individually and as a group with regards to your foreclosure progress. There are so many steps involved, and at any one given step, that property could be redeemed. And when that property is redeemed, now we're chasing to make sure the postable fees are out there, and there's a lot involved behind the scenes. You hired us initially because this is a very complex investment opportunity. It's a great investment opportunity, but it's complex. So we just ask that behind the scenes you let us do what we need to do, and if there's a problem, you'll be the first to know. If there's no problems, no news is good news. So what about the other liens that you have that are unredeemed? This is where we have new options that we're going to offer to our investors. Again, this has a lot to do with legislative changes. This has a lot to do with resource changes. There's new options that are available to our investors. And this is what they are. So we can sell to a third party at your cost plus 12% until you are paid in full for the lien. That's going to be 12% a year. I know that's not great, but it's a new option. It's not what you invested into when you bought your tax liens, but it's an option. It's better than what we used to be able to present, which was you can foreclose or let it cloud the title. That's what used to be out there. So this is a new option for investors. We'll get into a little more detail. There's even more detail in the novel, the correspondence, the long letter that I've sent to everybody at this stage. There's also the secondary market. Just in the last few years, the secondary market has exploded. And there's actually people now that specialize and funds that actually specialize in only buying liens on the second market. There's some ups and downs to the secondary market, however, and we'll discuss those as well. And those, again, I go into more detail in those in the correspondence that you've received. Sales and error. This goes to our reassessment and title search fees that we charge. Sales and error would often creep up or come up as we were in the foreclosure process. What a sale in error basically is exactly as it's termed. In the state of Illinois, there are a large number of provisions which enable us to file a sale in error on your behalf. What you get back in that aspect is your principal plus a certain percentage of interest since you purchased the property, or purchased the lien, excuse me. Traditionally, we put them in two categories. There's a lot more than that, but basically we have two categories, which is administrative, which means the county screwed up, and there's judicial, which means something happened to the property since you purchased the lien. It could be that it was the use code on it was that it was improved residential property, i.e. a home. And now the use code on it says that it's residential vacant land. That qualifies for a sale in error. We don't have to foreclose on it. We don't want to foreclose on it because when we bought it, we were buying what we thought was a home. Now as we're foreclosing on it, we're being told it's residential vacant land. That's a judicial sale in error. An administrative sale in error is where we go and we say, hey, County X, this should have never been sold in a tax sale to begin with. They've paid all their taxes. We want an administrative sale in error. We file a form. It's done. The judicial process, it's a little more time-consuming. It's just like the foreclosure process. There's hearings involved. There's petitions that have to be filed. So through that process, there's costs involved, and that's why I say up to 12% per year, because that can creep into your costs a little bit. But sale and errors, the importance here is that there's a lot of things that qualify a property for sale and errors. So during your redemption period of 3 years, we may not want to expose things that are sale and error. Once we reach this stage, we just want to liquidate the lien. We want to move it. So we may go and apply for sale and errors or expose those sale and errors. The only way we know how to do that, the only way we can do that, is to do reassessments and title searches. So that $225 you pay ahead of the foreclosure authorization is this is where it really exposes itself, is that it enables us to qualify liens for sale and error before we even present them to you. And when you receive your spreadsheets, you'll see where we have qualified liens for sale and error. They're highlighted in specific colors and whatnot, which you'll see as well, or you have already seen. Next is the lien remains to cloud the title. And again, a few years ago, this was option B. You had option A, foreclose. Option B, cloud the title. Most, if not all of you, have seen liens redeem long past the foreclosure maturation period, and you will continue to do so. The lien stays on the property, and it basically just becomes, almost like a chink in the chain. It will hang out there and linger out there, and so if there's a sale of the property or transfer of title or anything, this is going to pop up. Problem with the remaining cloud the title is you need some form of action to happen for it to expose itself and get itself paid off, like a sale of the property or a transfer of title, something like that. Newest option is to partner with PIP. This is absolutely 100% new. It is only probably 45 days old, and we are still working out the nuances that are involved with this process. But we have the model down enough to be able to present it to you. So we're going to go through each of these individually. So we're selling to a third party at cost plus 12%. What do you get back? You're going to get your principal plus your interest of 12% per year until you get a check in the mail. So basically what that means is it's now pro rata. Illinois is not pro rata, but this option is pro rata. The liens are paid off in as little as a month, or they can take as long as a year to pay off. The third party that we basically broker this option to, we sign an agreement with them an assignment agreement on your behalf, and we keep our hands basically in the pot until the process is done. They will take assignment of the lien. They will pay themselves all the costs to foreclose on the property, i.e., in this case, force the redemption or take title. When the lien is foreclosed and they take title of the property, or the redemption is paid, if and when they force the redemption, that's when they pay you. So you're collecting 12% per year up until that point, till you actually get that check in the mail. And again, your interest continues to accrue under the terms of this agreement until you receive payment in full. We act as your broker, quote unquote, your escrow agent, to make sure that you're paid in full and that you're paid exactly per the terms of the assignment. Secondary market. This is a great one that came available, like I said, within just last few years, basically. Anything that you don't foreclose on, anything that you don't sell to a third party, we're going to automatically stick it on the secondary market. We're not going to cloud the title anymore. It will continue to cloud the title, but we're going to throw it on the secondary market anyhow, and any offer that comes, we're going to present that to you as an option to accept or decline. The liens are offered to quote-unquote competitor tax buyers. Quite honestly, these days, it's not even competitor tax buyers. There's people that specialize just in secondary market tax liens. Their funds, they're huge, and they basically, as they call it, we put all of this onto a platform. Think of it as a used car lot for tax liens. That's essentially what it is. So your liens could be picked over, they could be sold wholesale in the whole package, or individually. So they're done on a lien by lien basis. Our goal is to earn you at least 10% above your total cost, including your assignments, fees paid to PIP, those sort of things. However, you do need to be aware that when we put these liens on the secondary market, there's no guarantee that we're going to be successful in selling the liens. They're going on to that used car lot. Eventually, a used car sits on the lot too long, it depreciates in value, and then you offload it for whatever you can get out of it. That's what happens with the secondary market. So the secondary market is not a magic wand where we say, poof, we've liquidated all your liens and we've earned you this amount. We're putting them up there, and a lot of them do sell. But just understand that they may not. And again, no news. Well, in this circumstance, no news is probably not good news. But if you don't hear from us, that doesn't mean we haven't put them up there. It just means they haven't been sold or liquidated yet. As far as you're concerned, it will process just like a redemption. If the redemption is for less than your percentage, then you know what you've gotten. However, with Illinois, with the secondary market, let me back that up a little bit. We have to get your approval before we will liquidate, because they're going to come to us with, just like a used car lot, with any kind of offer. Some of them are going to be ridiculous and insulting. Some of them will be fair and justifiable. Sales and error. I've already covered this extensively. But again, Illinois has a lot of provisions in place. You'll get some interest back. An example I've already given you: if the property burned down after we purchased the lien, well, it's gone from being improved residential property to being a vacant lot. That's not what we bought when we bought you that tax lien. We bought you an improved residential property. So we will file a sale and error in that process and get you your money back plus some interest on the lien itself. And the last bullet point there just kind of reiterates what I just said. Remains to cloud the title. Again, I've covered this. The lien can cloud the title indefinitely. Interest and penalties will freeze after 3 years of purchase. So we're getting close to that. If you bought it at 36%, 108% is what you can earn back on top of your principal. Big question that's coming up with some of our older investors: what is PIP doing to keep the liens redeeming? You know, whether it's clouding the title, I just kind of threw this in because it seemed to fit here. Whether it's clouding the title, secondary market, you name it. Some of the legislation has changed. Our policies have changed, and you know, because of the economy, we've made adjustments as well. What we do now is we send out nearly 68,000 notices to homeowners every year. That's a lot of postage. It has created an entirely new department for PIP just to process the calls and the feedback we get from sending out these notices. Now, in the past, counties or homeowners and property owners had one option. When we sent out a notice, or the county sent out a notice, they had to come up with all this money and all these penalties, go to the county, pay that amount in full at that time by cash, cashier's check, or otherwise. Now, we're able to offer payment and finance options. This has opened up a huge opportunity for our investors. Administratively challenging? Absolutely. But again, you're paying us to handle this on your behalf. We're able to offer payment options, and that, without getting into all to the legalese, because that's an entirely new webinar that would take even more time, you know, we can almost circumvent the foreclosure process altogether. This is very, 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 very new. But what we're doing now is we're offering payments and finance options, as well as resources that, let's say, poverty-stricken folks are more used to using, such as Western Union or MoneyGram, which are in every single grocery store and Walmart in the country. And these resources have not been available to us or our tax buyers in the past. This is absolutely an enormous step forward for our investors in Illinois. And the question has come up a lot: what are you doing to push redemptions? You know, I didn't want to foreclose. The liens didn't sell on the secondary market. I have 3 or 4 left over. How are you getting that to redeem? This has been an enormous success for us. The next one is phone contact and neighborhood canvassing is also being utilized now too. In the past, we could not mail, email, knock on the door, do anything that could be considered, I consider it encouraging the homeowner to redeem. Others might consider it harassing the homeowner to redeem. Now we actually have that option. We can leave notices on the front door. We can talk to the homeowners. We can canvass the neighborhood where we bought the liens. There are a lot of more options to us than there have been in the past, and this is speeding up the redemptions significantly. So the last option is to partner with PIP. Excuse me for 1 second. So partnering with PIP, sharing the risk and the reward. In this process, and mind you, we cannot do this with every single lien that we recommend you foreclose on. And we haven't even set the policy, but I'll put it out there now, is that, you know, for every 2 liens that you do foreclose on, we'll probably partner with you on one of them. Or excuse me, so if you have 3, we'll partner with you on the third to reduce this cost a little bit. And again, this is going to go back to those reassessment and title search fees. We're coming in with a much bigger sense of confidence, so we're willing to put our money where our mouth is, more so than we have in the past. In this process, in this model, The cost to foreclose and force the redemption is split 50-50 between PIP and the client. That means the ATAF fees, let's just say the postable and the non-postable fees. Those are split 50-50 between the two of us. They're all documented, they're recorded. You can check with the county to make sure that we are charging you exactly what we are paying. Well, 50% of it anyhow. Upon redemption of the lien, should we force that redemption, what you're going to get back is all of your principal and the non-postable and postable fees that you put towards the force of the redemption or the foreclosure. And then what we're going to get back are those fees as well. And then we're going to split the difference 50-50. So this is something very, very new. It's not in any of our agency agreements. It's something we've just come up with as a way of sharing the risk, but also sharing the reward at this stage of the process. Should the title become absolute in the property and it's rented or sold, whatever those profits, whatever those proceeds, whatever those revenues would also be split equally. So right now your agency agreement basically stipulates that we don't pay anything towards your foreclosure. We handle it for you. We oversee it. This would basically be an addendum to that agreement or a new agreement. Again, this is very new, so we're working out the the specifics for it. But in this situation, instead of us getting a 30% performance bonus or 25% performance bonus, I'm not even sure what it is, for the rental or sale of the property down the road after we foreclose and everything else, we would basically sign an addendum that says, well, we're going to pay half of it, but we're also going to want half the net proceeds of sale or net proceeds of rent on that particular property. So we're going to share the risk, but we're also going to share the reward. And again, we cannot do this on all liens. Please don't say, you know what, my option is I want to partner with PIP on every single one of these, because that's not going to happen. We have this year we have approximately, I believe, 100 clients with unredeemed liens in Illinois, which may sound like a really big number, but quite honestly, it's really not that big. And if we did this for every single client, for every single lien, we would be out of business tomorrow. But we will offer this option to every single client on an individual basis. So getting started, we're finally getting to the end of this, and thank you so much for everybody that's hung on my every word without falling asleep. Getting started, you're probably going to get this webinar before you've even gotten this spreadsheet. What everyone will get will be this spreadsheet, which basically is going to outline very simply. There's actually probably another 30 columns to the spreadsheet, but we will send you this version, which basically gives you what we recommend for foreclosure in your unredeemed liens, the address of the property in case you want to go and look for yourself via Zillow or I don't suggest a local broker, because anyone can be an agent or a broker these days. But anyhow, you can do your own background research as well. We've already done it for you, but if you want to just reassure yourself, by all means, go for it. But this will give you the yeses and the nos. Now this form has changed a little bit. I've actually stolen this from last year. But what it'll give you is highlights. If it's highlighted in kind of a rusty color, that's a sale in error. If it's something that we recommend you not foreclose on, but sell it off to a third party and get that 12%, that'll be another color, which I think is yellow. Nonetheless, you'll get a key of what the colors mean, and it may say yes, foreclose on it, but if we highlight it in yellow, we're saying let somebody else foreclose on it. So when you get this is what we're recommending or not recommending, as well as giving you what we feel is your next option or your next step in that process. Here's the first and last page of the letter you guys should already have gotten and have already have thoroughly read and reread and read again to understand everything that I've just explained in this long, drivelous presentation. But this is what you need to do to get started. You need to read through this again now that you have watched and sat through this presentation and had a chance to absorb everything that I've explained to you, and then follow the instructions. For the most part, it's pretty easy. The biggie that you're going to see that's different now is that we have actually started an entirely new division to handle nothing but what we consider the quote-unquote property side of our business. That is, once it's no longer a lien and it's moving to the deed phase, it's a whole new department that handles everything. Can you still send your checks and everything to PIP-West? Absolutely. We would prefer that you send them to PIP-East, which is on the East Coast. That means they're going to come to me directly. That means I'm the one that's doing all the auditing. They're not passing through any other hands and then getting to me. Everything's moving much more swiftly if you get it to me. Per this letter, we've also brought on my brother, who many of you have already spoken to. In this correspondence, I've pretty much provided you with his resume. He's very qualified. He's going to be your point of contact. I may not always be available to speak to you about what's going on because I am the one that is always in the trenches and getting my hands dirty. Yes, he does as well, but he will be your service representative. He will be the person that you speak to regarding any progress, any updates that you may need if you haven't gotten them from us in a group email distribution or even individually. Complete the authorization and then submit it to PIP-West. Again, very important that you go ahead and fill this out and fax it as well as snail mail it, or email. Email works too. If you get it, what we will do is with the email or fax version of this, we've engaged you. So as soon as we have this, we are going to start the process, and we're going to get things going while we wait for the snail mail to come in. A lot of clients in the past have taken this, the form on the right here, the liens being authorized to initiate foreclosure. They'll write all, or none, or as suggested. This is a legal document for us, so please actually fill it in. This goes with the form on the left. We can't say all. We can't say none or as suggested. You have to actually write in what it is. If you don't feel like putting the parcel number in and you just want to put the certificate number in, I'm okay with that. But we do need you to itemize this form. It's there for a reason. And again, as I just said, fax or email the forms to me and then snail mail them. You can send them to my brother as well. Our emails, our extensions, our cell phones are all here for you. Jot them down as quickly as you possibly can, because I'm going to hang this up here in a minute. But the sooner you get your forms to us, the sooner we get started on this process and moving forward. So I absolutely beg and plead that you please email and fax before you snail mail. We have had folks in the past that did not follow this instruction, and by the time the mail finally got to us, for whatever the reason may be, they had actually either missed or had come very close to missing our deadlines. So that we don't want that to happen. So, a fax, an email, somebody will call you back to confirm that we have received either or, and that we are moving forward in the process. Couple of really quick, frequently asked questions. I've pretty much covered all of these already. Why does PIP-West wait until the last minute to file petitions for foreclosure or petitions for tax deed? Excuse me. This year we're actually not. We're getting a little bit of a head start on the game. We do push it a little bit to the last minute because we're always working to redeem the properties. We're always encouraging the homeowners to pay off the liens. So by waiting to the last minute, we're liquidating as much as we possibly can and reducing the burden of decision making that you may possibly have to deal with. What if there are not enough funds in your IRA to file foreclosure? I ask that everyone in this situation, should you be in this situation, contact us directly or contact me directly. Because there are a number of different options available to you, and it's going to really depend on who your IRA custodian is as to what those options may be. We work through a number of different ones. It could be that we may recommend that you partner with PIP. It could be that we recommend that you sell it to your outside the IRA entity. There could be a number of different things, or sell a portion of it and partner yourself with the IRA. There's a lot of different ways, and each custodian is going to have their different rules, and obviously we want to stay within the regulations of each. Do you have to foreclose? Of course not. We've given you a number of different options. Can you do it yourself? Of course. We are your agent. At the end of the day, you can do anything. These are your investments. They are for you to do as you so please. We hope that you will always use us and use our guidance. Again, if you go to do it yourself, you'll probably find it's going to cost you a lot more than the fees that we have arranged with the attorneys and title agents that we're using. If you choose not to foreclose, what fees are you still responsible for? This is something new that's come up this year. Anything unredeemed, you're going to be responsible for $125 per lien. That is standard. It's a cost that we're passing on that we are subject to as well, and it is there to mitigate the burdens and reduce the number of liens that you have based on economic changes, legislative changes. You're going to be responsible for those fees, whether you decide to initiate foreclosure or not. The title search fee, if we take it to that next step, which in a lot of cases we will. Not in all, but in a lot of cases we will. And that second phase is to expose the sale and errors, and some of the other things that really concretes our decision making as to what we recommend you do on each particular unredeemed lien in your portfolio. You don't want to own property in Illinois, so what do you do now? There's really not a whole lot we can. Because we are an agent, we have the options that we've presented to you tonight. Those are there for you. And as your agent, we will point you in any direction that meets your exit strategy best. We may be able to liquidate this stuff to the secondary market. When you do take title, there's in the last few years, everyone has seen cash flow turnkey investments explode. Well, what are those? Those are wholesale investments that yield a better than average rental return on a property. Because you are actually getting your foot in the door ahead of even the foreclosure process, standard foreclosure process, you have the ability to liquidate your property to a cash flow investor or a wholesale investor, much more so than the average Joe, because you're going to be into it for so much lower than what they could pick it up for should the mortgage company have foreclosed on it, or a cash flow wholesale reseller may be offering it to you for. So did you want to own property in Illinois? Maybe not, but there's a lot of options and there's a lot of potential if you do. And we're not asking you to go out there and kick the tires on the place and anything like that. We're handling all of that for you. So keep that in mind, that we're going to keep this a passive investment opportunity for you. It's going to work very similar to a lien. Now you just have title of the property, and maybe you have an insurance bill that goes with it. So there's a lot that you need to consider on the plus side of this option. How quick are the sale and heirs and the secondary market sales? I've already covered this. If it's an administrative sale and heir, it's going to be pretty much immediately. If it's a secondary market sale or even a third-party buyer sale, it could be immediate. It could take some time. It really just depends on the situation of each individual lien at that phase of the process. So again, I've covered judicial SIEs. I've covered administrative SIEs. I've covered secondary markets and third-party buyers. This is where that crystal ball just it doesn't exist. We can't determine what's going to happen on which. We may have an idea, but we're not going to get your expectations high and then fall short. And that's it. Finally, thank you so much, everybody, for listening. I meant to do this. I tried to get it down into 1 hour, and I managed to get it done in 1 hour and 15 minutes. So I'm going to close very quickly, say thank you very much. If you have more questions, which I am sure everybody will, please reply by email, and we will get to you as quickly as humanly possible. We have a lot of liens and a lot of clients this year. Everyone's going to take an extensive amount of care and hand-holding to make sure that we get everybody through this process how they want to be and based on their exit strategies. And just like we place investors' funds on a first-come, first-served basis, we are going to reply and respond on a first-come, first-served basis, as well as doing all the other work that comes on a day-to-day basis. This time of year is probably as challenging, if not more so, than the actual tax sale season for me personally. Because my hands are in it as deep as possible. We have brought my brother on this year, who has a lot of real estate experience already himself, but more importantly, customer service experience. So by all means, direct your emails to him, copy them to me to make sure that we're both receiving everything, and I promise you we'll get back to you. Thanks again, everybody, for paying attention. I look forward to initiating whatever the process may be on your behalf, and thanks for being loyal investors. Have a great night.